Welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Hello, students. Today I want us to talk about accounting for errors. Accounting for errors. Accounting for errors, and we usually say that there are two types of errors. We say that there are two types of errors, that errors that can be disclosed, errors that can be disclosed by the trial balance, and errors which cannot be disclosed, that cannot be disclosed by the trial balance. What is a trial balance? A trial balance is a document that is prepared giving us the balances from the general ledger. Once we have posted our accounts on the T accounts in the general transactions, on the T accounts in the general ledger, we have done the debits and credits. Remember that before computerization, these things we used to do them manually. And because we used to do them manually, it was very easy to make mistakes. Unlike today, if you input the right thing, the computer does the processing all the way to the income statement and the balance sheet. That's never used to be the case. When I graduated from the University of Nairobi in 1987, most of the accounting documents and the books of account, they were maintained manually. And therefore, it was very possible to make mistakes in the process of debiting and crediting. But the debiting and crediting today is done by the computer. But accountants need to know what the computer is doing so that you are able to follow through. And you're able to understand how you're coming to the final accounts and even how to do the adjustments in the final accounts. And therefore, after posting, when you are posting manually, after posting in the T accounts in the balance sheet, every time, periodically, we will get the balance carried down. We will get the balance carried down, the balances at the end of the period, and we will take them to the balance sheet, the balance carried down, and we will take them to the balance sheet. If it's on the credit side, if it's on the debit side, we will, please mark this. Once you get the balance, assume that this was land. Because it's an asset account, the balance carried down is on the credit side and the balance brought down is on the debit side. You always come to the debit side. And you come to the balance brought down. You come to the balance brought down, and the side where you find the balance brought down, you take you take the balance to that side in the trial balance. You take the balance from that side. For instance, land, you can see land has a debit balance. So you come to the debit side and you capture the amount and you say, this is the land balance. If you have a creditor, so trade creditors, for instance, you have trade creditors, and the balance carried down is on the debit side, so balance brought down. Please mark that to know where to take it in the trial balance, we get the side after bringing the balance down in the T account. You look at where we have brought the balance down in the T account, you move from the balance carried down to the balance brought down. The side of the balance brought down is the one that determines the side you will take it in the trial balance. For trade creditors, is on the credit side. So you come here and you say, trade creditors. You say trade creditors, trade creditors, trade creditors. But ordinarily we know, other than an account like the bank balance, all assets and expenses accounts usually have debit balances brought down. All assets, other than bank, once in a while, the bank may have credit or debit balance, but all assets accounts have a debit balance. So you come land, plant and machinery, motor vehicles, we have a debit balance. Assets have a debit balance. Assets have a debit what? Balance. Furniture, the assets have a debit balance. Expenses, rent expense have a debit balance. Less expense have a debit balance. But all liabilities and capital, they have credit balances. Capital has a credit balance. Trade creditors have a credit balance. Bank OD, bank overdraft has a credit balance. Salary arrears, because they are liabilities, they have a credit balance. Salary arrears, they have a credit balance. Now, this document is called the trial balance. This document is called what?
Trial balance.
The trial balance. And the trial balance checks. The function of the trial balance are two. The functions of the trial balance are primarily two. The first function is to check the accuracy of posting in the trial balance from the general ledger. The accuracy of the way we posted in the general ledger and the way we carried the balances to the trial balance, was it done accurately? Was it done accurately? That's the first reason of preparing the trial balance, because if it was not done accurately, there is a chance that our debit balances will not be the same. The total debit balances will not be the same as the total credit balances. The total debit balances will not be the same as the total credit balances. And if they are not the same, that is a signal that we made a mistake somewhere in the course of our posting in the general ledger. We made a mistake somewhere in the course of our posting in the general ledger, or even carrying the balances to the trial balance. And therefore, we are prompted to start investigations to find out where did we make mistakes. Now, in accounting we say there are errors which are not disclosed. There are errors which do not cause the trial balance not to balance. The trial balance is still balancing, but we still have errors. Those errors, we call them errors that cannot be disclosed by the trial balance. The trial balance is balancing, the debits are equal to the credit, but we still have mistakes. Those errors are called errors that do not affect the trial balance. They do not affect the trial balance, and they therefore cannot be disclosed by the trial balance. But there are errors, if you commit them, the trial balance will not balance. You'll find that the debits are 1,970,000, or the credit is 2,180,000. Now, when they disagree this way, you know there are errors, and you start finding out which errors are these. For this class, I want us to first of all deal with errors that cannot be disclosed by the trial balance, and in the next class, we are going to study errors that can be disclosed by the trial balance and how to correct each one of these errors. Now, we will start with errors which cannot be disclosed. In other words, the trial balance will always balance. The trial balance, once you prepare your trial balance, the trial balance will balance. The trial balance will balance, but although it is balancing, we still have errors. We call them errors which cannot be disclosed by the trial balance. Errors which cannot be disclosed by the trial balance. Errors which cannot be disclosed by the trial balance. Number one, it is called errors of complete omission. Errors of complete omission. Complete omission. Now, error of complete omission is an error whereby the transaction is completely omitted in the books of account. The debits and credits were not done. If the debits and credits were not done, it means that at the end of the day, our debits and credits in trial balance will always balance. But we have committed an error because there is a transaction which we have not recorded. There is a transaction we have not debited, we have not credited. And how do you correct the correction of this error? You write post the transaction. Post the what? Post the what? Post the what?
Transaction.
Post the transaction. Post the transaction. For instance, our credit sale of shillings 1 million was completely omitted. Was completely omitted from the books of accounts. So the debit and credits were not done. So what do? We debit trade debtors. Because it was a credit sale, we debit trade debtors. We debit trade debtors with 1 million shillings. And we credit sales with 1 million shillings. And then if this is a journal that you are supposed to prepare, you must never forget that you always describe the journal. Say, to record a transaction that was not recorded in the book, that was not recorded in our books of accounts. That was not recorded in our books of what?
Accounts.
Number two, error of commission. Error of what?
Commission.
Error of commission is an error whereby a transaction is recorded in the wrong account. Transaction is recorded in the wrong account. But correct class. Correct what? Correct class. It's recorded in the same class. The same what? Class. What are we saying? Error of commission. For instance, you may have a situation whereby our sales, our credit sale to Peter Mugoroki, was recorded as a sale to Peter Mukenuki. To Peter what? Mukenuki. What are we saying? We are saying, basically here we are saying that the credit was correctly recorded. The credit was correctly recorded, but the debt was recorded in the class of debtors. It was recorded in the class of debtors. That we are saying the correct class. The class is correct. The class is what? Peter Mukenoki is a debtor and Peter Mugoroki is a what? A debtor. But the sale was to Peter Mugoroki, but was recorded as Peter Mukenoki. And therefore, it is always important to ask yourself, how was the transaction recorded? When you are told this way, how was it recorded? How was it recorded? How was it recorded? The wrong recording was debit Peter Mukenoki. We debited to Peter Mukenoki account with 1 million shillings. We debited Peter Mukenoki with 1 million shillings, and we credited what? We credited sales account with 1 million shillings. It therefore means the crediting was correctly done, but the debit was wrongly done. There was a debit and a credit, and therefore the trial balance will always balance. When there is always a debit and credit, the trial balance will always balance. But when that does not happen, the trial balance will not balance. Now in this particular case, there was a debit and a credit, but we debited Peter Mukenoki instead of debiting Peter Mogoroki. We debited Mukenoki instead of debiting who? Mogoroki. So what do? We want to remove this debit from Mukenoki to who? To Mogoroki. So we reduce the receivable from Mukenoki as we increase the receivable from Peter Mogoroki. We reduce the one we gave because it is not his debt, and we increase the one we never get because it is his debt. So to correct the error, to correct the what? To correct the error, we debit Peter Mogoroki account. We are taking to his account what we never took, and then we are crediting Peter Mukenoki to reduce the debt. To reduce the what? We credit Peter Mukenoki account with 1 million shillings. We credit Peter Mukenoki account with 1 million shillings. We are reducing the debt of Peter Mukenoki as we credit it, and we are increasing the debt of Peter Mogoroki as we debit it, so that whatever Peter Mogoroki should have received as a debit, he receives it, and then we reduce what had been taken to Peter Mukenoki. It is called the error of commission. It is called the error of what? Number 3, we have the error of principle. Now, it is very easy to understand these two errors. It is very easy to understand these two errors. Now, this error, you are debiting to the wrong account, the account of Peter Mukenoki, but all of them, Mukenoki and Mogoroki, they are debtors. They are what? They are debtors. And therefore, they are the same class. They are the same what? They are the same what?
Class.
Because they are both debtors. Because they are both debtors. We call it the error of commission. It's not a principle that we are violating. We are just committing an error. We are just committing a what? But now, when we post the wrong the wrong class and the wrong account, when we post the wrong class and the wrong account, we call it the error of principle. The error of commission, you post the wrong class, the wrong account, but the class is the same. If it's debtors, they are debtors. If it's creditors, they are creditors. It is called the error of commission. Error of commission, you're posting to the wrong account, but the class is the right one. But now, in principle, you post to the wrong account and even the wrong class. The error, the posting is done to the wrong account and wrong what? And the wrong class. The posting is done to the wrong account and the wrong class. The wrong account and wrong class. For instance, for e.g., purchased, or rather, paid motor vehicle expenses but debited motor vehicles account. In this particular case, motor vehicle expenses are expenses. Motor vehicles account, these are assets. One of them is a category, a class called expenses. The other one is called, a class called what? Assets. Assets and expenses are different classes. And therefore, the account you are posting is still wrong. Wrong account and wrong what? Wrong account and the wrong class. The wrong account and the wrong class. This motor vehicle expenses is an expense. It is not an asset. It is not an asset. It is not an asset. There are two categories. One category of expenses and the other one is what? Assets. And therefore, you are posting to the wrong account, called motor vehicle account, and you're also posting to the wrong account, an account of assets, instead of posting to the account of expenses. Expenses and assets are two different classes. They are two different categories of accounts in the general ledger. Here, we are posting to debtors. Both of them are posted to debtors, so it is, both of them are debtors. So it's the same class, the same class. Here, wrong account and wrong class. Wrong account and wrong what? Class. E.g., if we posted shillings 500,000 motor vehicle expenses to motor vehicles account. Now, this is reversed by removing, we remove from motor vehicles expenses account, posted 500 motor vehicle expense to motor vehicle account. So we remove from the motor vehicle account by crediting the motor vehicle. We reduce the motor vehicles account by crediting the motor vehicle, because a reduction of an asset, we credit the asset account. A reduction of an asset, we credit the asset what? So you come to motor vehicle expenses, motor vehicle account, because that's where we took the transaction, motor vehicles account, we credit it with 500,000. We credited the 500,000 and we debit. We never recorded expenses. We never recorded what? So we debit motor vehicle expenses to record it. We debit motor vehicle expenses to record what we never recorded. An increase in an expense, we debit the expenses account. An increase in an expense, we debit the expenses what? Account. We are removing it from where we took it. We took it to the wrong account called motor vehicle. So to remove it from motor vehicle, we credit the motor vehicle account to reduce the motor vehicle account balance. And then we take it where it's supposed to have been taken, motor vehicle expenses account. We debit motor vehicle expenses account. It is called an error of principle because we have violated the principle of the right class. We have violated the principle of the right what? Class. Then we go to one which is called error of complete reversal. Error of complete what?
Reversal.
Error of complete reversal. What is the error of complete reversal? It is an error whereby the account you were supposed to debit, we credited, and the account we were supposed to credit, we debited. It's an error of complete reversal. We reversed everything. It's an error where the account we were supposed to debit, we credited, and the account we were to debit was what? Was credited. Now, this error is corrected through two entries. This error is corrected, how many entries? Two entries. Now, the first entry reverses what was done. The first entry reverses what was done, and the second entry does what was supposed to be done. For instance, if we made a sale, trade debtors account, if we made a sale of 1 million shillings, we were to come here and we say sales of 1 million shillings, and we say trade debtors. We say what?
Trade debtors.
Trade debtors account, and here you come and you say sales account 1 million shillings. That is the correct way of recording it. That is the correct way of doing it.
Record.
But what happens if we reversed it? If instead of crediting sales, we debited sales. Instead of debiting creditors, we credited trade what? Creditors. Now, let me do it now. What we are saying, the error that it might have caused. So we debited sales with 1 million shillings, and we say trade what? Trade debtors.
Account.
And the trade debtors, we credited it with sales of 1 million. Now, we are reducing sales instead of increasing sales. We are reducing sales instead of increasing what? And here we are reducing debtors instead of increasing what?
Trade.
Debtors.
Debtors.
The first thing we need to do is to reverse what we have done. Because we reduced sales, we increased sales with 1 million. Because we reduced sales, we increased sales with 1 what?
Million.
And we say it is trade debtors. It is trade debtors. We are reversing what we did. Because we do not erase. We do not erase. We reverse. Because we had reduced sales with 1 million, because we had reduced sales with 1 million, we increased sales with 1 million. We increase sales with what? By so doing, we are only reversing what we did. We are not increasing sales the way we were supposed to increase sales. We are not increasing sales the way we were supposed to increase sales. We are only reversing. Because we had reduced our sales with 1 million, now we increase sales with 1 million, we are reversing the reduction. We are reversing the what? We are not increasing sales the way we were supposed to increase sales. The same thing from trade debtors. By debiting trade debtors with 1 million, and we say it is coming from sales account, we are only reversing what we had done. We are only reversing what we had done. Here we are reversing what we had done, and here we are reversing what we had done. To reduce. We reduced sales and we reduced trade debtors. So by reversing, by changing the order, we are reversing what we did. We are not doing what we are supposed to do. We are reversing the mistake we did. It's actually like writing off. It's actually like doing what? Writing off. And for that reason, now that we have, it is like now, when at that position, it's like we have not posted. We have collected the error that was done, but we have not posted what we were supposed to post. So after collecting the mistake that was done, now we post what should have been posted. We post what should have been posted. The first entry is to correct the error. The second entry is to post what should have been posted. The first, you correct the error. The second one, post what should have been posted. We should have credited sales with 1 million shillings. And we say trade debtors. And we increase debtors with 1 million shillings. And we say sales account. You say what?
Yes.
We say what?
Sales.
Please mark this. Mark this. It is very, very, very important that as you learn how to collect errors, you are able to identify the type of error, because once you identify the type of error, you are able to know the action to take. When it's an error of complete reversal, where what you're supposed to debit you credited, and what you're supposed to credit you debited, at the end of the day, the trial balance will still balance because there was a debit and a credit. But there is an error. There is an error. So when there is an error of complete reversal, what do? We first of all correct the error. We first of all correct the what?
Yeah.
Correcting the error. In this particular case, we had debited sales, now we credit sales. And after correcting the error, we post what should have been posted. What should have been posted was a credit to sales to record a decrease in sales revenue, and we debit trade debtors to record an increase in debtors. To record an increase in what?
Debtors.
That is called the error of complete reversal. It's called the error of what?
Complete reversal.
Complete reversal is what you debited, you credited. What you're supposed to debit, you credited, and what you're supposed to have credited, you debited. It is called the error of complete what?
Reversal.
The error of complete reversal. Number 4 is something called the error of original entry. It is called the error of what? Original entry. Why is it called the error of original entry? Because It is an error whereby the amount you recorded was wrong. The amount you recorded was what?
Wrong.
Number 4. Number 4, error of original entry. Number 4, error. This is number 4. This is number 5. This is 3. This is 4. This is number 5. Error of original entry. This is an error whereby the amount that we recorded in our books of account, both the debit and the credit was wrong. We recorded the same amount, the debit and the credit, but that amount is wrong. But because we debited and credited the same amount, the trial balance was still balanced, but we have made a mistake. We have made a what? A mistake. For instance, a credit sale of Kenya shillings 1 million to Peter Mogoroki is recorded as shillings 100 what? Thousands. A credit sale to Peter Mogoroki of 1 million shillings is recorded as 100,000. It therefore means we debited and credited 100,000. We debited and credited how much?
100,000.
100,000. We debited and we credited 100,000 instead of debiting and crediting what? 1 million. 1 million. What do we do? How do we collect this kind of an error? And because we debited and credited 100,000, the trial balance was still balanced. But we have had a mistake. There is an error. There is a what? There is an error. And therefore, ladies and gentlemen, and therefore, what we do is get the balance, get the difference, get the difference. Get the what? Get the difference and post it accordingly. Get the difference and post it accordingly. Get the difference and post it accordingly. What is the difference? The difference, in other words, within our books of accounts, we debited and credited with 900,000. We debited and credited with 900,000. Now we increase our debit with 900,000 and we increase our credit with 900 what? Thousands. So we will debit Peter Mogoroki. We debit Peter Mogoroki account because this is a credit sale. Because a credit sale is a receivable with 900,000 and we credit sale. And we credit what? Sale with 900,000. Sale with 900,000 to collect an error. Always try to describe of original entry. To collect an error of what? Original what? Entry. To correct an error of original entry. An error of original entry is where the amount debited and credited is wrong. We debited and credited the same amount, and therefore the trial balance was still balanced, but the amount is wrong. So how do you correct it? You look at the difference. How do we correct? We correct the mistake by getting the difference. And being careful to ensure that that difference is recorded appropriately. That difference is recorded appropriately and correctly. Number 6, it is the error called compensating error. Compensating what? Compensating error. Compensating what? Compensating error. This is where an error is made on the debit side. It is where an error of a specific amount is made on the debit side and another error side of one account, and another error of the same amount. Is made on the credit side of another account. For instance, if we made an error in the cost of recording our motor vehicles of 100,000, we over-debited motor vehicles with 100,000, and when we are recording our liabilities, we over-credited trade creditors with 100,000. These errors will cancel each other at the trial balance level, but the error will still have been committed, and they need to be collected. They need to be collected. They need to be what? They need to be corrected, and we say that this error is collected using the suspense account. This error is collected using the suspense what? Account. And suspense account, we are going to deal with it in the next class, in the next video, where we'll be recording errors that are disclosed by the trial balance. Please look for that video. Errors which are disclosed by the trial balance. Errors that are disclosed by the trial balance. Once again, I want to urge you, please subscribe, like, share, hit the notification bell so that every time we load this kind of videos, we'll be informing you. Thank you very much. Let us learn how to correct the errors using these questions. Using these questions, we say the first thing you need to do is to ask yourself, which error is this? Once you know the error, correcting the error is very easy. I always tell my students, please don't jump into correcting the error. First of all, ask yourself, which error is this? Because once you know which error, you will know whether it affects the trial balance or it doesn't affect the trial balance. You know whether it affects the trial balance or it doesn't affect the what? The trial balance. Now, we are told that the owner put in extra capital of 10,000. He paid into the bank. He took the money right into the bank account of the business, 10,000 shillings. But instead of crediting capital, remember the entry. When the owner puts money, it's very good to study the question. I like telling my students at times it's an issue of English. It's not even an issue of being able to make the corrections. We are told the problem is in the crediting. The problem is in the what? Credit. It is not in the debiting. The problem is in the crediting. Some students go even to look for debiting. No, you are being told here that the debiting was correctly done, but the crediting was wrongly done. We know in that particular case, we should have debited bank. We should have debited bank with 10,000 shillings, and we credited capital with the what? 10,000 shillings. But we are told that this one, instead of crediting capital, we credited sales. Instead of crediting capital, we credited. So the problem here is not the debit. This one was correctly done. But there's a problem with the crediting. The problem with the what? Now, this is an error of principle. Wrong account and wrong class. Wrong account and wrong class. So what do? We reverse the entry. We reverse the entry. Remember, we credited sales. We credited what? Instead of crediting the capital account. Instead of creating capital account. So this is what we deal with. This is what we deal with. So because we credited sales, we increased sales. We increased what? So to reduce sales, we debit sales. We debit what? To reduce sales, we debit sales account with 10,000. We debit sales account with 10,000, and then we credit what we never credited. We should have credited capital. We should have credited what? So we credit what we should have credited, capital, 10,000. Now it is very, very, very important that you realize that when you are told the crediting or the debiting, you are being told that the other entry was correctly done. There is only one entry that was wrongly done. It's only one entry that was wrongly done. So in this particular collection, always learn to ask yourself, what is the entry that we made? The entry that we made was debit bank, and we credited sales instead of crediting capital. So we are saying we reverse it. We reverse it by debiting sales to reduce the increase in sales, because it was not a sale, as we credit capital. To record the increase in capital, which was never recorded. To record the increase in capital, which was never recorded, and we are saying it is to record correction of an error of principle. To record the collection of an error of what?
Principle.
Principle. The next one we are told, goods were taken by the owner. Goods were taken by the owner. Goods were taken by the owner worth 7,000 shillings. 7,000 shillings, but debited to the again, you are being told that the crediting was correctly done. You are being told that the crediting was correctly done. What needs to be corrected is only the debiting. It's only the what? Debiting. Ask yourself what entry was done so that you're able to know what entry do you make. So in this particular case, we are saying, what did they do? We say we debited expenses. We debited expenses, but the crediting was correctly done. Crediting was correctly done to purchases. When the owner takes money from the food, when the owner takes inventory from the farm, we credit purchases. We credit what?
Purchases.
We credit purchases, but we don't debit expenses. We debit drawings. We debit what? We debit drawings. So this debiting is the problem. The debiting was the problem. This was correctly done. You don't go collecting what was correctly done. You only collect what was not correctly done. You only collect what was not correctly done. We are told the problem here is the debiting. We are not, don't go to crediting, go to debiting. Go to fix your debiting. The only thing you need to fix is our what? We are debiting. We are fixing our debiting. We're told we debit expenses instead of debiting drawings. Instead of debiting what? Once again, this is an error of principle. This is an error of principle because these are two different classes. Drawings and expenses are two different classes. It's an error of principle. We increased expenses, so we reduced expenses. We reduce what? And how do you reduce an expense? A reduction in an expense, we credit the expenses account. So we come and we credit expenses account with 7,000 as we debit what we should have debited. We debit drawings. We debit what?
Drawings.
We never debited drawings. So whatever we never debited, we debit to increase our drawings. And then we reduce expenses where we had increased. We had increased expenses wrongly. Now we reduce the expenses. We reduce the what?
Expenses.
We reduce the expenses. Number 3, private insurance of 890, but debited to insurance account. Private insurance of it. Ask yourself, are these categories the same? No. Private insurance is drawings. Insurance account is an expense. So again, it's an error of principle. It's an error of what? It's an error of principle. We increased insurance with drawings. So we need to reduce the insurance. We come and we credit the insurance account. We need to reduce the insurance because we had increased it. We credit the insurance account with 890, and then we debit, please again, we debit drawings. We debit because it is private insurance. It is not for the business. It is his own insurance. It is his own what? Once again, you are told clearly, the problem is the debiting. The problem is the what? It is not the crediting. It is only the debiting. So you deal with the debiting, you correct the debiting as you take the credit not to where it should, to the correct credit, but you take the crediting to reduce the insurance account. Reduce the insurance account. Reduce the insurance account. Number 4. A purchase of goods from C. Kelly of 8570 had been entered in the books. Had been entered in the what? Now look at this statement. He's not talking about the debits or credit. He's telling you it was entered in their books, meaning the debits and credits was 5870. Was 58 what? 70. So you are being told that the debits and here you are being told entered in the books. The debits and credit were entered as 5870. So it was understated. It was understated. It was what? It was understated, and the difference is 2,700. It is 570 minus 5870. It is 2,700. In other words, this entry was understated. This entry was understated. Ask yourself, what was the original record? We are purchasing goods from C. Kelly and had been entered in the books as 5870. So if we assume that we are buying on credit from C. Kelly, we are saying we debited C. Kelly, we debited purchases. We debited what? We debited purchases account with 5870. We debited purchases with 58 what? 70, and we credited C. Kelly to record a liability. To record a liability, a payable, a trade payable, we record a trade payable to C. Kelly of 5870. We are recording a payable to C. Kelly of 58 what? 70. But we are saying, instead of having a debited and credited 5870, we should have debited and credited 8750. So we add recorded. So to correct this error, we now record more. We record more. We record more. We repeat the debit. So we debit purchases. We debit purchases account with 2700 as we credit C. Kelly with what? 2700. So that when you add the two, 5870 and 2700, it will give us 8570. To 5870 plus 25700, it will give us 8570. To give us 85 what? It is an error of original entry. The amount was picked and debited and credited the same amount. The same amount is an error of original entry. How do you correct it? By either increasing the debits and credits or reducing the debits and credited. If we over-recorded, we reduce. If we under-recorded, we increase. Number 5, cash banked that 900 had been credited. It is very, very important you ask yourself, what did they do? And what was the mistake in what they did? Cash bank that 900 had been credited to bank account. So you're basically saying we have cash and bank. We have cash and what? And bank. We are saying cash bank had been credited to bank. Had been credited to what? Now, we are getting money from the office and we took it to the bank. Instead of debiting bank, we reduced our bank. We reduced our what? We credited our bank. Instead of debiting bank, we credited what? Bank. We credited bank. Cash bank that men had been credited to bank. Instead of debiting bank, to show money in the bank is increasing, we credited the bank and debited the cash column. We recorded an increase in cash. We recorded an increase in what? Cash. Now, this is what we are calling an error of complete reversal. An error of complete what? Reversal. What we were supposed to debit, we credited. And what we were supposed to credit, we do what? We debited. What we were supposed to credit, we debited. And what we debited, we are supposed to credit. What do? We said we enter 2 entries. We enter 2 entries. The first one reverses the wrong word that was done. We debited and credited the wrong accounts. So the first one, you reverse this by crediting and debiting. And the second one is to make the entry the way it was supposed to be done. So do you think the bank was, cash bank had been credited to bank. So because we credited to bank, now we debit bank. Now we debit what? We debit bank. And because we had debited cash, now we credit cash. Now we credit what? Cash. Now once you do that, you have reversed the wrong entry. You have reversed the wrong entry, but now you need to record the right entry. You need to record the right what? How do you record the right entry? We are taking money from the office, so cash is reducing. A reduction in cash, we debit cash, we credit cash. A reduction in asset, we credit the asset account. So we credit cash and we increase bank. An increase in bank, an increase in asset, we debit the asset account. Here we are saying it is coming from cash account, and here we are saying it is coming from bank. Here it is the money in the bank is coming from cash, and the money from in the bank is coming from cash, and the cash is coming from bank. The cash is coming from bank. Let's see how to do it. Let's see how to do it in terms of the double entry, in terms of journals. In terms of journals, we are saying the cash bank that 900 had been credited to bank. So we reverse bank. We reverse what? We debit bank with that 900 as we credit cash. As we credit what? Cash account. That 900. We are saying it was credited to bank and debited to cash. And debited to cash. So we credit cash because we had increased cash, which we were reducing. So we credit cash to reduce cash, and we debit bank. That first reverses the entry. That reverses the what? The entry. But what is the right entry? The right entry is to increase bank from cash. We debit bank account. We debit bank account with that 900, and we credit cash account with that 900. I want to repeat again. The record was done this way. We took money from the cash, from the office, and we took it to the bank. So instead of reducing the money in the office, that is crediting cash, we debited cash. So we now need to credit cash. We now need to credit what? Cash. Instead of increasing money in the bank by debiting bank, we credited the bank. So we debit the bank. You are reversing. We reverse error of original entry. We reverse the original entry. We reverse the original entry, and after we have reversed the wrongly done, the original entry, then we post what should have been posted. Post what should have been posted. Post what should have been. What should have been posted. Post what should have been posted. In other words, now the first one is corrects the error. The first one corrects the what? The other one is making the correct post. Make the correct post. The other one is making the correct post. Making the correct post. Number six. Cash drawings of 4,000 had been credited to the bank column of cash. We withdrew money. Please again, students, when you are told this had been credited, had been what? Credited. You are being told the problem is the crediting, it's not the debiting. The debiting was correctly done, but the crediting was a problem. We know cash drawings, you are supposed to debit drawings. You're supposed to debit drawings account with 4,000, and you credit cash. You credit what? Cash with 4,000. When you're told had been credited, had been credited to the bank column. We know the correct posting is crediting cash. The correct posting is crediting what? But it was posted to credited, we credited bank. We credited what? So instead of crediting cash, we credited the bank. So this one, don't go to the debiting. Don't go to the debiting. Go to these two accounts. Go to cash and what? Bank. Go to cash account. So we're saying we should have reduced bank because the cash drawings had been debited to the bank account of the cash book. It was cash. We withdrew cash. The owner went to the office and took cash. He did not take cash from the bank. He took the money from the office, the cash which was in the office. Now, but instead of reducing the cash in the office, we reduced the cash in the bank. So we need to add back the cash in the office. So we debit bank. We debit what? We debit bank to increase the cash in the office, in the bank, with the 4,000, and we credit cash. Whatever we never credited, we now credit cash account. We never credited cash. Now we credit cash to reduce cash, and then we debit bank to increase bank. If you look at this, this is an error of commission. This is an error of commission because both of them are monies. They are money accounts. They are money what? Accounts. It's an error of commission. It's not an error of principle. All of them are monies. They are money accounts. And therefore it's an error of commission. So you don't debit, you don't deal with the drawings. You don't deal with the what? We don't deal with the drawings. You deal with the account that was wrongly credited and then the account which should have been credited. So when you are told the crediting is the problem, you deal with the account which was correctly credited and the account which should have been credited. The account which was wrongly credited and the account which should have been credited. When you are told that debit is a problem, you deal with the account which was wrongly debited and the account which should have been debited. The one which was wrongly debited and the account which should have been debited. You don't go to deal with the credits. You don't go to deal with the what?
Credit.
With the credits. Now, the other final, number seven you are told, return inwards of 1680 from M. Cathy had been entered in error to J. Charlton's account. These are two debtors. These are two what? And therefore, again, this is an error of commission. It's an error of commission. It is the same class, but wrong account. Same class, wrong account. They are debtors. They are what? They are debtors, but instead of taking this return to M. Cathy, we are taking it to J. Charlton. So it's an error. Number 7 is an error of what? Error of commission. Error of commission. So you just, the one to whom it was credited wrongly, we debit. The one where it should have been credited, we take it. Now, look at this. This is a different way of telling you that the crediting was wrongly done. We credited J. Charlton to reduce his debtors instead of crediting M. Cathy to reduce his debtors. So it's a problem with the crediting. It's a problem with the what? The debiting was correctly done, but the crediting was a problem. The crediting was a what? Return inwards of 1680 from M. Cathy. What does return inwards? When we sell to M. Cathy, we debit debtors as we credit sales. We debit debtors as we credit what? When the customer returns the goods back to us, we are supposed to reduce their receivables. We are supposed to credit their debtors as we debit return inwards. As we debit return what? Inwards. So we are told it had been entered in M. Cathy instead of J. Charlton. So it had been entered in J. Charlton instead of M. Cathy. So we debit, we credited J. Charlton, we debit J. Charlton. We had reduced his debtors balance wrongly with 1680. So we reinstate his debtors. We reinstate J. Charlton's debt as we credit M. Cathy. As we credit M. Cathy. As we credit M. Cathy. To record the reduction is M. Cathy's debt. When he returned the goods, we need to reduce his debt. So we credit M. Cathy's account, debt balance, to reduce his debt. To reduce his what? To reduce his what? Debt. Now, the final one, a sale of motor vehicle at 100,000 was credited to motor vehicle expenses account. At this elementary level, we know that when we sell an asset, we credit the asset account. When we go to study depreciation, we're going to explain this further. But a sale of a motor vehicle should be credited to motor vehicles account at this level. This is elementary. Because we are reducing the asset called motor vehicle, and a reduction of an asset, we credit the asset account. We are not supposed to be crediting the expenses account because a motor vehicle is not an expense. We are supposed to credit the motor vehicle account because we are reducing the asset of motor vehicle. We are supposed to credit the motor vehicle account. So we credit motor vehicle. We credit motor vehicle. And I want to repeat again. If you have been a blessing to you, if these videos are of great importance to you, like I suspect, please subscribe, like, share, and hit the notification bell so that every time we load such videos, we will be able to inform you. Now we are saying, because we are selling the motor vehicle, and therefore our assets of motor vehicle are reducing, and a reduction in an asset, we credit the asset account. In this case, we will credit the motor vehicles account with 100,000, and we will debit. Yes, we will debit motor expenses account. We debit what? Motor vehicle expenses account with 100,000. Now, a sale of motor vehicle at 100,000 was credited in motor expenses. We reduced motor expenses wrongly. An increase in expenses, we debit the expenses account. And because we reduced the expenses wrongly by crediting it, now we are debiting it with 100,000, and we are reducing what we should have reduced, the motor vehicle expenses account. We are reducing what we should have reduced, motor vehicle expenses account. I want to repeat again. It is very, very, very important, especially when it comes to noting the errors that do not affect the trial balance. The errors that do not affect the trial balance do not go to suspense account. They do not go to suspense account like you're going to see in the next video. We'll be discussing errors that affect the trial balance and how they go to the suspense account and how to collect them through the suspense account before the preparation of the final account, and even how do we correct them after we discover them after preparing the final accounts. Something very, very important in this thing, always find out, am I supposed to collect the two accounts or am I supposed to collect only one account? Anytime you are told this one was debited or credited, you collect that account. You don't collect the two accounts that were originally recorded. You collect that account affecting the one which was never correctly recorded. Thank you very much. Once again, like, share, and hit the notification bell